Hey everyone, welcome back to Corporate Decoder. Today, Nine Energy Service Incorporated just filed their latest 8K report, and I am seeing some interesting financial footnotes that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting Q1 2026 results, and it looks like they are back from the brink after a tough period. Alright, let's dive into what Nine Energy Service has reported. This is a current report, meaning it is about a significant event. In this case, it happened on May 13, 2026, and it is all about their financial results for the first quarter of 2026, which ended on the 31st of March. They issued a press release detailing these results, and that press release is included as part of this filing. So the main point here is that Nine Energy Service Incorporated put out a press release on May 13, 2026, talking about how they did financially in the first 3 months of 2026. This is important because it gives us a snapshot of their performance and challenges during that period. It is like getting a report card from the company itself, and we can see how they are doing in the current energy market. It's worth noting that this information is being furnished, not filed. What that means is that it's being provided to the SEC, but it's not being treated as if it's part of their official SEC filings for legal purposes. This is a common practice for press releases and earnings reports that companies include with their 8Ks. It's a way for them to share information broadly without taking on full legal responsibility for it under certain sections of securities law. Think of it as a public announcement that they're letting the SEC know about. Now, all the juicy details are in that press release, which is attached as Exhibit 99.1. I've reviewed that release and it paints a picture for the quarter. We are seeing some really interesting movements in the energy sector, and Nine Energy Service is a player in the oil and gas equipment and services space. They have a market cap of around $451 million and employ over 1,000 people. Recent news has been quite dramatic for Nine Energy. We're seeing headlines about them exiting bankruptcy and aiming for significant revenue in the second quarter. There are also discussions about their Q1 struggles amidst ongoing disruptions, and whether the stock is a potential value trap or a genuine opportunity. This context is crucial because it tells us this filing isn't coming out of the blue. It is part of a larger ongoing story for the company. The fact that they were approved for listing on the NYSE American in March 2026 is also a positive sign, suggesting a move towards greater stability and visibility after a period of financial difficulty, likely the bankruptcy mentioned in the news. Looking at their registered securities, their common stock trades on the NYSE American under the ticker symbol 9. This is the stock that many investors will be watching. As we saw, the key exhibit here is that press release. While we do not have the full financial tables directly in this 8K filing itself, the press release it references is where the detailed numbers for the quarter ending the 31st of March 2026 would be based on other news. It seems the company is reporting struggles in Q1. Headlines suggest Q1 2026 was a challenging period. One of the primary reasons cited in recent news is disruptions, which is a common theme in the energy sector. These disruptions can stem from various factors, including supply chain issues, weather events, or geopolitical influences that impact the availability and cost of resources and services. We can infer from the news that earnings call presentations and transcripts for this quarter are also available, indicating that the company has been discussing these results and their outlook. This suggests that while Q1 might have been tough, the company is actively working through its challenges and communicating its strategy. When we look at the Q1 results, there are a few key things investors typically care about. First, revenue, did it go up or down compared to the previous year or quarter? Second, profitability. Are they making money or are they losing money? This is often measured by net income or earnings. Per S-Hair, third, cash flow. This shows how much cash the company is generating from its operations. And finally, their balance sheet. This gives us a look at their assets, liabilities, and equity, which tells us about their financial health and how much debt they have. Given the context of exiting bankruptcy and aiming for higher revenue in Q2, it is highly probable that Q1 saw a dip in revenue or profitability, or perhaps a mix of both, as the company navigated the aftermath of its restructuring and the ongoing market conditions. Companies emerging from bankruptcy often face a period of rebuilding, which can involve cost-cutting measures, strategic shifts, and a focus on operational efficiency. The mention of exits bankruptcy is a huge deal. For a company to go through bankruptcy and then be listed on a major exchange like the NYSE American signifies a major turnaround. However, it also means they have likely had to make significant compromises, potentially including debt restructuring, which can impact ownership dilution, or asset sales. Looking at the institutional holders, we see significant stakes from Mackay Shields, LLC, Algebri, and Cygnus Capital Advisors. This indicates that sophisticated investors are watching Nine Energy Service closely, suggesting they see potential value or are conducting thorough due diligence. MacKay Shields, in particular, holds a substantial 22% stake, which is a strong signal of their conviction. So, while this particular 8K is primarily a notification of the press release, the information contained within that reference press release and the surrounding news paint a dynamic picture for Nine Energy Service. They are in a recovery phase, facing headwinds but also demonstrating resilience. The focus now will be on their ability to execute their plan, capitalize on the anticipated Q2 revenue, and deliver sustainable profitability. The biggest concern for a company like this, especially after bankruptcy, is its ability to generate consistent free cash flow and manage its debt obligations effectively. The energy sector is also inherently cyclical, so external factors like commodity prices and global demand play a significant role in their performance. What I am actually looking for is a clear path to sustained profitability and growth that doesn't rely on the commodity price cycle alone. The risk I am watching is whether the company can effectively diversify its services or secure long-term contracts to provide more predictable revenue streams. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more, and join our Discord community through the link in the description.